Well, hello guys. Welcome to today's video. This will be a continuation of the market action, price action. Review, as well as studying what's currently happening. So before I come back here, just entered some shots on gold right now. I'm gonna come back there later. Let's now first of all focus on Nasdaq. So Nasdaq haven't really touched it since yesterday, and this, if you checked the previous video, this was the entry or this was the trade I took yesterday. I bought Nasdaq over here, and I told you guys I was targeting these highs, this one here, and there's a possibility you might tap into that bearish daily fair value gap. And with my rules, I often close positions whenever it reaches 4 p.m. Or 22 p.m. That's for example, I was supposed to be closing here, but you see, since this is not my real account, this is paper trading. I did not even touch it, and this just to resume where we left from, and to show you guys what's really happening. The reason why I took this trade, I explained it in the previous video, and I'm not gonna go into it since we have not yet delivered to the buy side liquidity line here. I'm not gonna be touching it. Everything still looks bullish. So coming today, the price action on Nasdaq was not really good. I was trying to check what price is doing here. Let's start with the daily time frame. So on the daily time frame, you realize that we've taken liquidity of the previous day, that's of Tuesday highs, and price has started reversing, going down, and just going down to make some correction or a correctional move before we go back to resume going higher. And when you're going low, this hourly time frame, the first question we're going to be asking ourselves, if price has taken liquidity of previous day here, then we're coming below. Where are we going to? Our first target is going to be these inefficiencies, this fair value gap here, this one here. See this one? That will be the first one. So I don't really expect price to come and fail it, but that can happen. I would like price to come, just what it just did, I'm tapping there, then it goes back up, or within the consequent encroachment of that fair value gap, and that's where I would like to, within the consequent encroachment, this level here, price might want to tap in there before we proceed higher. So maybe you can position yourselves within that consequent encroachment, that midpoint, with a long, like maybe like this, like something like that, and targeting this high, which is not really such a good risk to reward ratio, but it's just 1 to 3. And remember, yesterday I also did not get a good entry. I was supposed to be entering down here, actually somewhere here, and my stop loss below here. When this manipulation, the manipulation taking up this previous day's lows was happening, I was supposed to be entering here, but you see, I entered I opened the charts late, and still was able to understand what was happening. So this is what I'm expecting on Nasdaq, though. This is now we're on a premium zone, and in some scenarios, if you understand advanced market move, you can be able to take trades this premium of premium. So for example, this PDRA we are currently using, this is now what I call discount of premium. That's gonna be quite tough for you guys to understand. Those are ICT concepts, but I kind of tweaked some of them a bit. For example, what I mean by discount of premium is that we're on a premium PDRA on higher time frame, but when we go now on a lower time frame, for example, this hourly, when I draw from a measurement from that high to the next PDRA here, which is this bullish fair value gap, for example, like this, something like that, you will see that we are currently at a discount. A discount of what? Of premium of higher time frame. I know that's quite confusing, but it's not really important. I'll be able to talk about this in another video. But I think there's a video I talked about, advanced PDRAs in this channel, so you guys can maybe check it out. So that being said, now this position can go to break even. Yeah, maybe actually it's not supposed to be coming below there. Yeah, something like that. But remember, this paper trading, this is just for to show you guys what's really happening. And my bias is still the same. I'm still expecting sells on Nasdaq. I don't expect Nasdaq to be bullish. So this is just a correctional move. Once liquidity has been taken here, we can target the next liquidity. Then after that, you see this seller position, I'm expecting us to continue lower on Nasdaq. Now, that being said, let us go on gold. Now, on gold, we are apparently very bullish. We are very, very bullish. So somebody might be wondering, like, why am I even thinking of, selling gold? Yet we are very, very bullish. I know. Market structure is something that changes or varies from time to time. It can be 15 minutes, 1 hour, 30 minutes. And it's not something that is always stagnant at one point or one side of it. We are very bullish, but I've sold because of the price action. And given that whatever I'm doing is not such a high probability trade because it is against the higher time frame movement. But still, if you know what you're doing and you understand what you're doing, good for it. So apparently, I knew that we are bullish on the daily time frame. When I checked on hourly candle, I saw that we've been, going lower after taking previous day highs. Yeah, we just took previous day highs here, and price has been, let me take a look at this closely. Actually, not really previous day highs. There's something we balanced here that yes, here it is. We balanced this bearish hourly fair value gap. This some of the reasons why I took that sell, this one here. And as you can see, even the way price closed into that hourly bearish fair value gap here. Let me just mark it with a line. We closed aggressively above it. Like price was interested in really, really going higher. So as even thinking about sales here, for example, what I'm doing is not really such a good idea, but when I see a setup and I think it matches the quality of whatever I'm looking for, I just take it. I don't really think so much about it. So that being said, uh, we had balanced a PDRA up there. So that's where you're coming from. So that's where you're coming from. Where are we likely to go to? I was taking a look at this, this bullish caps here, and also seeing the way we closed, aggressive on this bullish, fair value caps. I had interest of us going lower and taking these lows, or probably these ones here. These ones here. These ones are the ones which I was actually targeting. But from the look of it, let's see. So when we take a look on 15 minutes time frame or still on the hourly still, you'll realize that price has been, we had this bearish fair value gap here, which gave me confidence of taking that sell. I did not just take it, uh, without having this into consideration, as much as it was not such a good uh, trade because it is against the higher time frame. But when you understand price action and see what's happening, you can be able just to see what you can do about it. So the price action here, as you can see, the first candle tapped that bearish fair value gap, then came back in. The second one tapped into, like, close to within the body of the closed its body within the body of the within the range of the previous candle, and that showed me signs that this price is not really interested in going that higher, and we had this bearish fair value gap here. So my entry was actually supposed to be here. This was my entry. So when I moved into like a 5 minutes time frame, I started looking for something that price is likely to take here before it go down, and here it was. So after taking this high, which was just next to this bearish hourly fair value gap, that's why I took that sell over here using this other fair value gap that you're seeing here. So I don't really care what price is going to be doing right now. If it goes and hit the stop loss, well and good. I don't really care. I don't really mind. It's trading is probabilities. either way at the end of the day. And if you think that the I'm just here, to make wins, and no losses, then you are very wrong. This is trading, and trading is about probabilities. Once you follow the rules, once you understand what you're doing, just let it go. Okay. So that being said, and from the look of it, this one I'm seeing it's really interested in that stop loss level, but I'm gonna trust price. I don't have to do anything or get worried about anything. Let it do what it wanna do. I don't really mind. So that's what I'm really interested in gold. But generally, this was short term. This is not really. As I have to look at, guys, that this is against the main, move for gold. Gold is very bullish, as you can see. Even the way yesterday's candle closed, we are very bullish. We are very bullish, and remember, I told you guys we are targeting these highs. And remember, for the guys who bought here, uh, when was it? Was it on Monday? On no, this one no. I think it was on Monday. Yeah, I think Monday I gave analysis. Yesterday was quite a no touch for gold because of the price action. And that being said, I'm expecting price to just come actually again here because there's liquidity created in here. Already we've balanced, with a Monday. So I'm just expecting price to come down there, and possibly there's something I wanted to see here. There's some liquidity I was really interested in down here. You see this one here, actually possibly filling this gap here, this bullish fair value gap here before we go higher. So I'd advise, if you want to trade gold, look for buys, and look for buys from this zone from here to here. So alternatively, you can just put an entry. Your entry can be here, stop loss slightly around there, then you target that high. That will be, let's make it 127, or that will be fast TP. And you can target these highs also, this one here, and that will be around 1 to 10 R. So that's it on gold. So if you're looking for buys, look for it down here, knowing that price is this is the drawn liquidity. That's why I took this sell. So no matter what happens, I don't really care. And that being said, this was not such a really good setup. You see this one here, but still it's not done until it's done. So many times gold has always come to the stop loss, then it just goes back to take profit. And also something to keep in mind is that gold is heavily manipulated. Gold is one of those pair that is heavily manipulated. And I don't really care about the manipulation. I've done what I'm supposed to be doing. I understand what's supposed to be happening. So that being said, I don't really care what's going to happen. I expect it to come and take liquidity here. If it stopped me out, then come and take liquidity down here later. I'll be positioning myself for buys somewhere below here. So that will be it for price action for today, guys. Remember, this is a continuation series that I'm going to be doing every day to show you guys how I take trades, how I trade, and how I read price, so that you can also gain experience and be able to do this also on your own. And that being said, let's meet in the next one. Cheers and have a great day ahead.